All right, friends, tell me if this sounds familiar. You finally made a decision. You're like, hey, I'm going to start investing in the stock market. This is what I want to do to build my wealth, to build my net worth. But then you dive in and you start hearing all these words that you've never heard of before. So one of the first words you're going to see is dividend. Now, we as human beings tend to overcomplicate things because that's just what we do as humans. What I want to do, and my goal in today's video, is to explain dividends in a way that my 4-year-old could possibly understand it, because I wish somebody would have done that for me, because I would have started my investing journey much sooner. But before we get started, my name is Joseph, and my wife Stefanie and I have built a family of 4 and are now debt-free millionaires living abroad. And our goal on this channel is to create weekly videos about our experience on what it's like to build wealth, invest, and pursue financial independence as a family of 4. So if you're into that type of content, consider subscribing and come hang out with us at least 2 to 3 times each week here on YouTube. All right, with that being said, let's jump in. So I personally love food. I really, really love food. So that's what we're going to use today in order to explain what dividends are. So what I want you to do is I want you to imagine a local pizza shop that you love. You probably already visualized it like I did whenever I was creating this script, because I'm like, oh, I know exactly what pizza shop. So I want you to visualize that place right now. Okay, now the next thing I want you to do is actually visualize your favorite pizza that you would order from that specific pizza shop. And now that pizza is likely going to be delivered to your table or to your home with those delicious, cheesy, pepperoni, pepper flake slices that we all love. But maybe that's just me. Okay, now that we've visualized the pizza shop and we've thought about those yummy slices of pizza, let's all wipe our mouths and I want to reframe our minds. Now I want you to visualize each slice of pizza like they're actual pieces of the pizza shop that they're willing to sell in order to expand, to grow their business. And now what I want you to do is I want you to imagine that you're an investor, maybe you are an investor now, and you want to actually invest in this company with your hard-earned money beyond just buying a piece of pizza from them. Now, each slice of pizza that you own is actually going to be like a small piece of this particular company. Now, in most cases, whenever you buy into a company, aka invest in a company, what you're typically going to do is you're going to earn your income or grow your net worth through the growth of this company. So the more valuable it is to the market, and the more people who demand to have a piece of that company, your piece of that company actually grows because the value of that company has grown as well. However, whenever it comes to dividends, which is our main focus today, you can actually earn money in 2 different ways. One is the value of the company increasing, so therefore your investment increases. But 2, we're going to be taking a look at how dividends actually get paid out to you because you own this company and you believe in it so much. So the way dividends work is, let's say you've given money to this pizza shop and they are so thankful they have this surplus of cash and they've got to figure out what to do with it. They can either say, hey, I want to keep growing my pizza shops and I want to buy different pizza shops all over the city. Or what I want to do is I want to continue to have my company run really well. And what I'm going to do is I'm going to send a thank you to each of my investors through the form of a letter that's going to go out, and it's also going to have cash in it. Dividends are kind of like those grandparents who send an envelope to those kids who have birthdays and they actually put cash in it. So that's how the company is doing it as well. It's like, hey, thank you for being my grandkid. Thank you for believing in us. Here's a little thank you. And also here's a little money to go with that thank you. Now, here's one thing to keep in mind whenever you are deciding to invest in dividends. Although you can grow your investment through these companies becoming more popular and having more demand for people, and then AKA their actual value starting to increase, most people who are investing in dividends are not looking for the company to grow, because a lot of the times these companies will actually stay fairly flat, which means investors are looking for dividends, aka money coming to them to passively live off of and or pay expenses. So a lot of investors will look at dividends this way. Hey, I can go invest in these other companies that will probably grow and have a potential to grow, but they can also fall really fast. So a dividend investor will say, you know what, I don't want to deal with the volatility of the stock market as much as these other companies will probably be subject to the volatility, the ups and downs, if you will. And so I'm going to go invest in these dividend stocks because they're going to stay fairly flat and they're going to be a little bit safer for me, at least how I feel about it. And so that's why I'm going to go invest into a dividend stock rather than a value stock, right? A growth stock. So I guess one way to look at it is a dividend investor is going to say, hey, this is a lot more reliable and a lot more steady income than worrying about a company going up and down. Now, the cool thing about dividends is whenever you go to look at these companies on the stock market, they're going to tell you exactly how much they're going to pay you for each stock that you own. So be sure whenever you decide, hey, I want to go buy these dividends, you actually research how much you get per share. So what I want to do is give you a real life example. Let's say you want to have a Coca-Cola, for example, with your slice of pizza. Right now, Coca-Cola is paying out 46 cents for each share that you own of their company. So basically, you're roughly getting about $1.84 per each share of Coca-Cola that you have, aka investing in Coca-Cola. Now, some of you are probably saying, well, how'd you come up with $1.84 based off of 46 cents? Well, all I did was to take 46 cents, there are 4 quarters in a year, and I multiplied that by 4, and I came up with that value. Now, one thing to keep in mind find is a lot of these companies who pay out dividends will pay out quarterly. Some will do monthly. So whenever you go in to do your research, make sure you're researching exactly when the payout structure is so you know when you're going to be receiving your dividends for the specific companies that you're investing in. So simply by believing in Coca-Cola, by investing with them, giving your hard-earned money and saying, hey, I really believe in what you're doing. I believe in the future of this product and where it's going. They're going to send you 46 cents per share that you own to make sure that they are saying thank you, aka they're sending you that envelope digitally these days, right? But that thank you envelope with 46 cents per share that you own each quarter. Now, 46 cents per quarter may not sound like a lot. So what I want to do is I want to give you a real life example of one of the world's richest men, Warren Buffett. So Warren Buffett owns about 400 million shares of Coca-Cola. Talk about a nice quarterly check. So because he owns 400 million shares of Coca-Cola, he makes about $7.3 million per year just from owning Coca-Cola and receiving their dividend. Now, look, I know most of us are not going to have that money to go buy 400 million shares of Coca-Cola, but the key here is just to understand what dividends are, how to use them, and then just getting started. Now that we know exactly how we're going to get paid by holding on to dividends and investing in companies that are going to pay us a dividend, let's dive a little bit deeper into what a dividend yield is. Basically, what you want to do is you want to look at a dividend yield like this. It is a percentage of the total amount that a company is willing to pay out to you for owning one slice of the pizza, aka one piece of the company that you're investing in. So what I want to do now is I want to continue using Coca-Cola as an example because, pizza and soda, that's just a normal everyday thing that people have. You can put your favorite beverage that you like with pizza down in the comments below, but let's talk a little bit more about how Coca-Cola works. So Coca-Cola stock right now is worth about $59.83, and they're paying out a quarterly dividend, if you remember what I said earlier, of about 46 cents, which comes out to about $1.84 per year. So what we're going to do in order to get our dividend yield, we're going to take our annual dividend that we get from Coca-Cola, which is about $1.83, and divide that by $59.83, which is the stock price for Coca-Cola, and we should get about 0.030075. And then what we're going to do is we're going to take that number and multiply it by 100 in order to get our actual true percentage, and it should come out to about 3.08%. So this is what all the people who are much smarter than me do whenever they talk about dividends. They talk about the dividend yield. I'm not there yet. I don't know if you're there, but this is what the smart people use in order to sound really smart when they're talking about dividends. So if you want to sound really smart, you can use dividend yield in your conversations when you're talking about your investments. But for a simple person like me and probably most new investors, the main things that I'm going to care about is a company doing well? Do they have enough cash flow to pay their dividends, to pay somebody like me who's interested in investing in them because I believe in the direction they're going and what they're doing so much that I'm willing to give my hard-earned cash to buy a small slice, aka invest in their company. So in layman terms, or normal people speak, for those of us who are not these guru investors, a dividend is simply a monetary thank you from the company saying, hey, I really appreciate you believing in what we're doing, the direction we're going, and for that, I want to give you this small amount of money in return for that belief. So to simplify dividend yield as simple as possible, think about it this way. They're saying, hey, here's a small percentage of what it would typically cost to buy this particular stock, and we're going to give you that small percentage as a thank you for buying this stock. So the cool thing about dividends is the more slices of the company that you own, the more you can actually get paid out each quarter just for owning that stock. Now, one thing I think every new investor or those of you who are starting to invest in dividends should understand, investing in dividends is not like this get rich quick scheme like you might think because of all the different dividend videos that are coming out. Dividend investing is one of those strategies. It is a long-term play and used by investors like Warren Buffett in order to build as much possible income as possible from their dividends. And the key word there is long-term, long period of time. So if you want to build that strategy in order to build your dividends, make sure that you're looking at the future of what you're trying to do and making this a long play. One of the main goals for dividend investors is they're trying to build up their dividends so they can actually live off that money and or pay for as many expenses as possible. So this was a very basic overview of what dividends are, but Stefanie actually created a video right here that you can check out where she breaks down how we actually bring in almost $1,200 per month through our dividend strategy. But hopefully this video was just enough to get you started and gave you enough knowledge to go out there and give yourself permission to be wealthy.